What's up everyone, it's Karthik with MoneyVest. So brand new all-time highs for the market seems like pretty much every single day. And here we are, we've got the S&P 500 up another 40 basis points on the day, trading up to new all-time highs just shy of 5,900. We have the NASDAQ trading up to over 18,489, up over 60 basis points. And the Dow Jones more or less very flat on the day. Closed out my Tesla call options with a 98% profit, so pretty decent week since Tesla pretty much didn't go anywhere. It was basically trading flat. Bought back this option for $2 and pretty much sold new calls for next week. And the SOXL puts that are also expiring next Friday are up over 55% as well. I actually drove Tesla Model 3 for the first time ever. That's my first time driving a Tesla, and the entire vlog is going to be coming out tomorrow. So I drove it in Dubai in the UAE, had literally one of the best experiences, and you will have a complete overview of my entire diligent note-taking from the 30-minute test drive, and also experiencing what it's like driving a Tesla. So I'm going to be editing that video, and that video will be posted tomorrow on the channel, so make sure that you do check that out. And also join our Discord. There is a 16% annual discount available until the end of this month. You get access to all these options, portfolio updates, all the trade alerts, the MoneyVest website, which we are going to be coming out with 3 new feature updates: the Elite Investors, which is going to be all institutional investors and their holdings, the MoneyVest Index, and the Risk Reward Tradability. And that's going to be a very cool dial, which is going to tell you where the risk reward is in the market. And third and most importantly, our shopping list for the month of October. It's going to pretty much be all the stocks, highest quality names, with my buy targets also presented in that video. So definitely do check out the link down below if you want to join. Of course, get access to all the updates, the Discord, the trade alerts, the website, and everything else included as well. So we'd love to have you on board. And also I shared this very important checklist, which is a 44-point checklist for options trading, which I think is going to be very useful for you if you are trading options. And I also shared another Excel spreadsheet for tracking your options. So 2 really important resources shared with all the members. So link's going to be down below if you want to download the Excel file and the PDF as well. Now, moving forward to individual sectors, we had communication services pushing up over 74 basis points, real estate up over 70 basis points as well. The NASDAQ 100 up over 66 basis points. We had the utility sector once again pushing higher. So today we had both tech and utilities pushing up very nicely. Healthcare, materials, discretionary, S&P, technology, industrial, staples, the bond market, pretty much everything was pushing higher on the day, except for energy, which was slightly down after oil prices rolling over as well. But all in all, very nice momentum, a broad-based rally for the entire market as it continues to trade near all-time highs. Utilities still leading the way, up almost 30% on the year, and technology is up over 21.6%, so a little bit about an 8% differential right now is what we have between those 2 particular sectors. Financials also very green, 27% year to date, followed by the comm services sector up over 26%. And even in the last 1 year, you'll notice that technology has certainly lagged behind. It's not a leader. It's not a sector that's actually dominating this market higher. Only a 37% increase in the last 1 year, with utilities up over 38.8%. So a little bit under 40% right now. So very strong gains coming in from utilities as opposed to technology or some of the other more tech-heavy sectors of the market. We are back in the extreme greed as the MoneyVest Index is also back in the 4s, as we've discussed in our previous updates, as the market continues to hit new all-time highs. However, if you take a look at volatility, it's still, on a relative scale, pretty elevated. But of course, it's now coming down to 18, so it was down over 5.5%. So as it continues to come down, market continues to rip higher, and that's the inverse correlation that we're also seeing from the market as the MoneyVest Index kind of flirts around the 4 level, which again is a cautious zone. Now, this doesn't necessarily mean it's a sell signal. As I mentioned this before time and time again, and for all new beginner investors that are joining us on an everyday basis, I really want to help you understand how we at MoneyVest use this very important metric. It's called the MoneyVest Index. We have created this. It's got very strong track record. It's actually guided my entire trading and investing decisions over the last several months. And, if you've back tested this, if you come over to Strategy Tester, you'll notice that it's got a 99% profitability level. So you can pretty much see the percentage of winning trades, right? The number of winning trades divided by the total number of closed trades, and a percentage of profitability, 99%. So it's got a very high hit rate. However, there's a very specific way on how we utilize this, and that is it's only a buy signal for me. It's not a sell signal, because just because this Money Invest Index is trading above 4, which on a numerical level is a very high level, so it can range any from 0 to 5. If it's trading back up to 4, that means it is at a higher level, but that doesn't necessarily mean sell, because the markets can and will remain overbought, overvalued, expensive, irrational for a far longer time period than they are oversold, undervalued, cheap, and there's fear. So when the Money Invest Index really comes down to 3 or 2.4 or 2, that suggests a clear buy signal. So that's where the buying window opens up, and I'm very aggressive in dollar cost averaging in and around these levels inside that green sort of rectangle. So we got really 7 bands, of which 3 are green, 3 are red, and 1 is basically neutral, which is in the yellow. So every time it comes down to those green levels, that's a buying opportunity. But every time it gets up to that red zone, that does not mean a sell opportunity. However, when we were testing this, when we were back testing this, we were selling anything that's above 4, I think 4.5, and we put a threshold to buy when it was down at 2.4. So you're taking fewer trades, but you're taking the highest quality trades, and that's why you're trading the best setups, and your success rate is really, really high, because you're really selective in your trading and investing decisions. But of course, at the same time, you're not trading as frequently. So just because we're at 4 doesn't necessarily mean that it's a sell signal altogether. It just, for me, means hold. It means that I'm going to sit back, enjoy those gains, let the markets do its thing, let the markets do the work for us. I'm invested, taking advantage of this market rally. And if and when we actually do see the levels come down to 3.5 or 3 or 2.4, that's going to be the cue for me to dollar cost average a lot more aggressively. Now, there is one more thing that I will continue to buy, regardless of where it goes. If it's going to continue to go at all-time highs, I'm going to be buying a little bit more every single month, because I am extremely bullish on this particular asset class over the next 1 to, let's say, 3 to 5 years, as much as 10 years. I did a video on this 3 weeks ago. So as you can see that I'm buying more, don't miss out, buying more. Last time I mentioned this, and this was, of course, none other than your gold, right? So gold, of course, hitting new all-time highs once again. So if you come over to gold prices here, just take a look at this. I mean, just incredible. Up another 1% today, trading up to $2,721 per ounce. So this is, for the first time in history, gold is trading as high it is right now. And if you take a look at the rally that we have seen, like literally from October of 2023, and I had so many people comment in these videos, gold is not worth buying, gold is just going to be really old, it's just not worth investing, it's dead money, you're wasting your money, it's just buying nothing. Look what happened. Literally look at what gold has done. 50% increase since October of 2023. Look, again, gold is not an asset class that I'm going to be comparing against the returns of, let's say, the S&P 500 or the NASDAQ or tech stocks or Nvidia, for example. Yes, there's going to be better places to put your money. That's not the point. The point is that gold is now, in my opinion at least, getting started with this new bull cycle. We're seeing that live in front of our eyes. If you come over to the monthly time frame, I mean, just take a look at this massive increase. I mean, it's not had a red month in such a long time, and it really finally broke out of this consolidation. So if I remove for everything here, what really happened is that gold obviously was pushing higher here, and it started consolidating sideways right about there. So that was a clear bull flag breakout for gold, trading up to $27.21. And now what we're seeing is a potential target up to as much as $3,000. So I will continue to dollar cost average slowly and steadily. This is my gold portfolio, as I mentioned in my previous updates as well. So there's 24 karat and 18 karat gold. So that's just a different purity of the gold. 24 karat is 99.99% pure gold. 18 karat includes some copper, aluminum, silver, other metals as well. And these are the current prices per ounce. So as we know that, $27.21 per ounce is the 24 karat gold, and 18 karat also hit a new all-time high at $2,000 per ounce. So I have all of this as physical gold, and right now my P&L is sitting anywhere from 39 to as much as 57%. On my oldest position of 26 grams of 18 karat, I'm up over 60% on this particular position as well. So I will keep buying. I will continue to dollar cost average a little bit, slowly and steadily. Very, very small portfolio, of course, less than $10,000, but nonetheless doing really well on this particular asset class as well. And I think one of the reasons why gold is pushing higher is because of how much money that we're going to be printing moving forward. So it really is, there's an element of the USD sort of potentially depreciating, as a currency. And the purchasing power, of course, under a lot of question because of inflation and where it is and where it could be potentially going because of so much money that we're going to be printing because we need to finance all the deficits. I mean, the U.S. deficit just topped over $1.8 trillion in 2024, and interest on that debt surpassing $1 trillion mark as well. So those are some pretty staggering numbers if you really consider where we are as an economy in the U.S. And the interest alone is now approaching almost $1 trillion. So just think about that for a second. If a $1.8 trillion deficit and of that a $1 trillion interest payment, like that is one of the most upside down financials I have ever seen in literally the entire world. Like no 1 trillion to 1.8. What is that in percentage terms? We are talking in terms like 55%, more than half the deficit is interest, right? So it is actually absolutely crazy how much the U.S. is spending versus how much it's bringing in. The deficit came in despite record receipts of $4.9 trillion. So $4.9 trillion in taxes, payroll, corporate tax, income tax, capital gains, everything. And then it still fell short of outlays of $6.75 trillion. And the government debt has swelled to over $35 trillion, an increase of $2.3 trillion from the end of fiscal 2023. So literally $2.3 trillion increase in just a matter of 1 year. Wild. Absolutely crazy. And what that's going to do is, it's going to increase bond offerings, the bond auctions, right? The U.S. is going to continue to essentially release a lot of these bonds in order to fund its deficits, right? That's what happens because if you don't have a surplus, you need to find the money to run the country, right? You need money for healthcare. You need money for Medicare, Medicaid. You need social services. You need education, infrastructure, defense, interest on the debt alone. So you've got all these expenses, right? And the U.S. is running a deficit. There's obviously no surplus, despite the $4.9 trillion of record revenues. There's still no surplus. And so whatever that deficit is, the deficit has to be bridged somehow. And what is the U.S. going to do? They're going to sell more bonds. They're going to sell more U.S. government-backed debt securities, which other countries are going to buy. In fact, Japan and China are some of the largest holders of U.S.-denominated debt. And if the demand, of course, is not that strong, what's going to happen to the yields? Yields are going to start moving higher, which means that the interest on that debt is going to continue to go up. So it really is a very, very tricky situation. I know that a lot of people try to ignore this because the asset base of the U.S. is very high. The real estate market's really strong. The U.S. markets, the U.S. equity markets are pretty strong and liquid. But this is a problem which is eventually it needs to be tackled, right? Because Jerome Powell has said this, Ray Dalio has mentioned about this, Warren Buffett has said about this, that this is a problem which eventually someone has to deal with. Someone has to deal with this because if it's not, the baby boomers or even the millennials, it's going to come down to the Gen Zs or the Gen Alphas or the next generation after that because eventually it's going to keep swelling up to a level where 40, 50, 60, 70 trillion dollars is just an insane amount of debt. And that's going to devalue the currency further because there's a lot of money printing. So I think that's one of the reasons why gold is a safe haven, where at least you've got that physical nature of gold prices that you can. And that's why I'm buying physical gold also, because I don't want to have US dollar denominated assets, right? That's also a small part of me, 1% of me is kind of like, okay, some physical gold. Of course, storing it is always going to be a bit of an issue if you're buying in larger quantities. But then that's why you have safes. That's why you have other places where you can store it. But that's the whole idea behind having at least some, assets in gold, whatever that denomination ends up looking like. So, that's why I'm okay, comfortable, kind of diversifying a little bit into this. And that's why, of course, yields have also been pushing higher. If you come take a look, the 10-year yields are still sitting well over 4% because the demand is not that strong, right? I mean, the markets are clearly anticipating either higher inflation, economic growth, or both. And for those reasons, we're seeing the yields back above 4%. The markets, however, continue to move higher because there's a lot of new money also entering the market, right? There's a lot of money that's sitting on the sidelines, over $6-7 trillion in money market funds that also is entering this market in a lower interest rate environment. As interest rates come down, there's a lot of quantitative easing that's taking place. And of course, next week, we got a lot of earnings and we're less than 3 weeks away from elections, from the FOMC meeting, and a new round of economic data that's also coming out. So all in all, very, very green day. We had most of the stocks, most of the sectors pushing higher. Silver prices also up over 6% actually. So let's take a look at silver on a per ounce basis. So we have silver at just over $33, $34 per ounce. So also pushing up really well after consolidating sideways, but still nowhere near close to its all-time highs of well over $49, $50 per share. It's really been gold that's been just killing it, absolutely. And Bitcoin also $68,000. So Bitcoin also had a pretty strong week. I think over 9% this week. Yep, 8.8%. So very strong move to the upside. And the next target's going to be all the way up to $72,000 for Bitcoin as well. And this is going to turn into a support for BTC as well. Coming over to S&P 500, SPX, we've got all-time highs coming in. Very, very strong. And we're sitting at just under 5,900. And the next target for S&P is going to be sitting all the way up to as much as 6,000. We're just a little bit shy of all-time highs. We got up to as much as 5,872, so 6 points off of all-time highs. But that right there is going to be that next potential target that many are eyeing for the S&P 500. And again, support level is going to stay put at 56.67. However, this is a record close, though. This is a record close because yesterday we closed down significantly. So S&P 500 has never really closed as high as it closed today. So this is a record close, even though we didn't hit a record high. Support level at 56.67, like I said, down to as low as this higher low, and this higher low, this is ascending support for the S&P as well. Moving over to the NASDAQ, so IXIC, so we're seeing a lot of consolidation sideways, so still within the context of this rising wedge. So that's where we are, a little bit of an uptrend as we're coiling inside this rising wedge here. Resistance is going to stay put at 18,600 for the NASDAQ. Coming over to Apple, and Apple also getting rejected at this resistance, roughly at 236, 237. Support level down to 232, all the way down to $217 per share for Apple. And if you come over to some of the market calendar items, so earnings calendar wise, next week we've got, let me just quickly sign in. Just give me 1 second here, and let's just log in. And if you come over to the market calendar for next week, of course, we got a lot of earnings coming out. So let's just go over to market calendar, earnings calendar for next week. We got companies like, again, Tesla, Amazon, S&P Global, Coca-Cola, AT&T, T-Mobile, IBM, Nucor, General Electric, a lot of really big tech companies, S&P 500 companies that are reporting their numbers. And of course, the following week, we've got pretty much the big boys, Apple, Microsoft, Google, Meta Platforms, all of them reporting. And when it comes to the economic calendar, let's just quickly take a look at what's on the schedule for next week on a high impact basis. We got durable goods orders. I believe we may have some medium impact items. Again, some existing home sales, of course, jobless claims that come out every single week. Then we've got new home sales, all that stuff. Michigan consumer sentiment numbers. So again, very, very light on the economic calendar going into next week as well. But again, we'll have a lot of Fed members also talking. Resistance for Apple sitting roughly at 236. Support level down to as low as 233. Coming over to Amazon. A lot of consolidation sideways, just a little bit shy of $190 for Amazon. A very nice little ascending support and higher low for this company as well. And support level is going to stay put down to $180 a share. I also picked up ASML in the 690s earlier in the week. We had a very strong close, 723. So already up close to $30 per share, a little bit over $30 per share on the ASML purchase. I did an entire video on ASML talking about how it was a good price point in the 600s to start buying, start dollar cost averaging a little bit, starting a very small position, and of course buying a little bit more if it continues to come down. But we're seeing a very nice recovery already for ASML. Coming over to Tesla, and Tesla going sideways is actually a good thing because we haven't really seen Tesla do anything this past week. Last 4 to 5 days, it has literally been trading sideways. There's a lot of doji candles, and that's good. That's why I was able to close my entire Tesla calls here that were still below my cost basis. So I was breaking rule number 1, but luckily, Tesla didn't really do anything. And for next week, earnings are coming up, and I've also sold new calls, collected just a little bit over $400 for next week as well. Lowered my cost basis by another $4 for Tesla. Support level is going to stay put at $208. Resistance all the way up to $234 for Tesla moving forward as well. Coming over to NVIDIA. And NVIDIA here pretty much trading near all-time highs. Again, resistance is going to stay put at $139, close to $140. So that is going to be that level to keep in mind. Support level at 129. And of course, going over to advanced micro devices, continues to trade a little bit more on the weaker side. Higher low is going to stay but roughly around 153, 154. Resistance all the way up to 171. all the way up to as much as 186 for advanced micro devices. PayPal, on the other hand, also pushing up a little bit over 1.4%, so very nice, back up to $81 a share. Resistance is going to stay put right about there at 81 bucks. Support level staying put roughly at $76 per share. And PayPal also is reporting earnings on Tuesday, October 29th. Visa, again, trading back up to almost new all-time highs here. Very nice recovery back up. Resistance going to stay put right about there, roughly at $292 for Visa, and support level at $282 for this company as well. Coming over to Meta Platforms, and Meta also is just slightly very weak, getting rejected at this resistance, roughly at 581, 582, and we got a lot of consolidation sideways in that range for Meta Platforms. 540 is going to be that support. Resistance all the way up to $601 per share. Netflix was the big gainer on the day, up a little bit over 11%, hitting a new all-time high, perfectly validating that support on the day after a huge gap up. So huge resistance turning into a big neck support here. And of course, a very massive green candle coming in for Netflix to hit a new all-time high for the company. So very strong update from Netflix here. Google consolidating sideways, once again getting a little bit of that rejection from this area of resistance for Google, and support level is going to stay put down to 153, down to 152 for this company. And finally, coming over to Microsoft, a lot of consolidation sideways for Microsoft as well. Low 400s is where that area of demand is. Now, Enphase, I will be doing a private, maybe not a private, but a public, we'll see, but a more deeper dive, a dedicated video on Enphase very soon. So don't worry. Very similar to ASML, I will be going over Enphase over the weekend, and support level is going to stay put inside this area of green rectangle and that support, and demand resistance all the way up to $123 per share. We got Costco here, a lot of consolidation sideways in that range for Costco as well. Resistance is going to be all the way up to $920, support level $872 per share. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like and subscribe to the channel. Don't forget to join our MoneyVest community if you want. There's a 16% annual discount available until the end of this month. Pretty much access all the Excel spreadsheets, the PDF downloads, downloading our checklist here, and of course getting access to all the trade alerts. Make some money with us. If you have any questions, feel free to reach out. But the bottom line is, fear and greed index back to extreme greed. MoneyVest index also back up to over 4. So this is a market where I'm just really simply enjoying the gains as they're coming pretty much every single day as the markets continue to disregard everything, keeps pushing higher than the all-time highs. But I'm trading options on the side to generate some nice little premiums and incomes and cash flows along the way. And of course, focusing on buying a little bit more gold as it continues to trade at new all-time highs. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like. Have a fantastic weekend. As always, happy investing. I'll see you all in the next video.